For decades, the dollar has dominated world markets to the point of becoming what Wall Street Journal columnist Andy Kessler considers the backbone of the horizontal empire of the capitalist US economy. However, Russia's invasion of Ukraine and the resulting sanctions that Western democracies have imposed on Vladimir Putin's regime may have opened a breach in the dollar's dominance. The United States, the United Kingdom, and European institutions have frozen a substantial portion of the $630 billion equivalent that make up the reserves of the Central Bank of Russia. We are talking about hundreds of billions of dollars that overnight have ceased to be controlled by Moscow.
No one who predicted what sanctions the West might impose could have predicted this. It was simply a robbery. Sergei Lavrov, Russian foreign minister.
And that is not all. Encouraged by the US federal government itself, companies such as Visa, MasterCard, American Express, and the financial services of companies like Google and Apple have stopped operating in Russia. Washington has also banned several Russian banks, including Sberbank, the country's largest bank, from operating with dollars. The ultimate goal? To disconnect Russia from the global financial system as punishment for the heinous storm of fire and destruction that this country has unleashed on Ukraine. But, VisualPolitik fans, there might be a slight drawback.
If you change the rules for Russia, you are changing the rules for the whole world. Once these rules change, they change international finance forever. Mit Gulati, professor of financial law at the University of Virginia.
The problem is that all these measures raise some questions. Can countries like China be confident that they will not suffer the same fate? If so, won't they take steps to become independent from the power of the dollar? Could this pose a serious threat to the global dominance of Uncle Sam's currency? Well, in this new video, made in collaboration with our friends at Value School, we are going to answer all of these questions. So, let's get cracking.
The influence of the dollar.
Since the Bretton Woods agreements in July of 1944, the dollar has been the world's reserve currency. In the 1960s, former French President Valéry Giscard called it the exorbitant privilege of the United States. The fundamental idea of Bretton Woods was that the dollar was pegged to gold while all other currencies were pegged to the dollar itself. A scenario that changed completely in 1971 when Richard Nixon abandoned a gold standard, suspending completely and forever the convertibility of the US currency. Despite this, the new virtual dollars have continued to form the backbone of the modern banking system. A system that is no longer backed by any precious metal, but primarily by confidence in the US market economy and the ability of the US government to meet its commitments and the power of its formidable war machine. This explains why the dollar is by far still the most widely used currency in international trade, financial transactions, and central bank reserves. In other words, with such a background, who can dare to question the hegemony and solvency of the greenback? Well, VisualPolitik community, this has basically been the prevailing thinking over the last decades. And it also explains why almost 60% of the $12.8 trillion that make up all the world's foreign exchange reserves are denominated precisely in dollars. Just take a look at this. Without digging too deep, the People's Republic of China itself safeguards its reserves more than $1 trillion in US government debt, and in total, its assets dominated in this currency could be close to $2 trillion. This makes it, by the way, the largest foreign creditor of the United States of America. The importance of the dollar is so great that evidence tells us that when countries deplete their dollar reserves, they face painful financial collapses. This is precisely what happened to South Korea, Thailand, and Russia itself during the crisis of the late 1990s. But let's not get sidetracked. The fact is that since 2014, both China and particularly Russia have been trying to progressively reduce their exposure to the dollar. To date, they've only partially succeeded in doing so. This is because the Chinese government considers the dollar's current position as one of the bulwarks of US power. So it is publicly confirmed that it intends to make the yuan play a much more important role in the global financial system in the long term. Well, now the Russian invasion of Ukraine and the sanctions imposed against the Russian government, especially in terms of freezing the country's foreign reserves, could accelerate these plans. This, at least, is the risk that many experts and analysts have indicated. And indeed, at the end of March 2022, the former executive vice president of the Bank of China, Zhang Yanling, publicly advocated that China should support the rest of the world in getting rid of the dominance of the dollar, while also being blunt about the consequences of the Ukraine war. Check this out.
Sanctions will make the US lose its credibility and undermine the dollar's long-term hegemony, Zhang Yanling.
Because Of course, it's not just about China. Many autocrats, tyrants, and populist leaders around the world would be delighted with this change in position. So now the question is, will Russia's expulsion from the global financial system spell the beginning of the end of the dollar as an international reserve currency? Will Russia and China agree to adopt the yuan or pivot to cryptocurrencies, turning the sanctions against Russia into a kind of historic turning point? Well, wait a minute, because things could be much more complicated than we might think at first glance.
The unassailable strength of the dollar.
Losing reserve currency status, even partially, would be a severe blow to the US economy. In the worst case scenario, the depreciation of the dollar, which would lead to a massive sale of greenbacks, would cause inflation to soar to levels never before seen in the US. The purchasing power of households and businesses would likely suffer a severe correction, and capital outflows could wreak havoc on their financial markets.
Wars also challenge the dominance of currencies and support the emergence of new monetary systems. Zoltan Pozar, analyst at Credit Suisse.
But is this scenario really feasible? Well, the truth is that it seems unlikely, almost impossible today. Why? Well, because we have to take into account the three great advantages, the three great strengths that Uncle Sam's bills have. Outside Europe, Japan, and above all, the United States, there are simply not enough liquid financial assets to meet the enormous demand that would displace the dollar. What's more, virtually all countries with major international currencies, with the exception of China, have supported sanctions against Russia, so we would basically all be in the same boat. And in the case of the yuan, we have to take into account China's capital market is not an open market. This currency does not have free convertibility, and that degree of legal certainty is nowhere near the equivalent to that of the United States. So, for the time being, and at least in the near future, it's not a reserve currency. Next, we have to keep in mind that investing in other minor currencies could entail significant financial and also political risk. The case of Russia is a good example. Chinese-owned rubles saw their value depreciate by 40%, only to rebound later due to the imposition of huge controls that limited the use of this currency. And last but not least, what on earth can you do with these currencies? Of course, the restrictions do not allow you to use them to buy assets and products all over the world, and that's not going to change anytime soon. On the other hand, there is the matter of cryptocurrencies, but today they do not seem anywhere near ready for this mission, and governments such as the Chinese government are not exactly fond of these types of independent assets.
China outlaws all cryptocurrency transactions.
And now, the second major reason. The United States seems to be doing better than its European peers, the Chinese economy, and even the other major Asian economies. Precisely for this reason, the Fed seems to be betting on taking the lead among the major central banks in tightening monetary policy. In contrast, China's central bank seems to be willing to follow the opposite path in an attempt to fuel its lately ailing economy. Of course, relatively higher rates would strengthen the dollar's position over the next few years. And yes, we are talking about something conjunctural, but it could help to turn the page of the effect of sanctions on Russia. However, what is much less cyclical is the third major strength of the dollar. It is backed by a much better oiled economy and a younger demographic. Let's not forget that all the latest technological revolutions have had their epicenter in the United States, from the digital economy to biotechnology and medical research. Other important sectors for this country could also do very well in the coming years. I am talking, for example, about oil, gas, and defense.
US exported record amounts of liquefied natural gas in 2021. US LNG exporters emerge as big winners of Europe nat gas crisis. Japan plans record defense spending in 2022 with 10th straight annual increase. Germany to set up a €100 billion fund to boost its military strength. Chancellor Olaf Scholz says urgency of Ukraine crisis has forced decision to increase defense spending.
Well, the fact is that, so far, the only structural element that seems to damage the relative position of the dollar is the strong public deficit that controls the federal government's accounting. Conclusion? Everything points to the fact that the sanctions against Russia will not endanger the role of the dollar, at least not immediately, and not even in the medium term. Of course, this does not prevent the United States from taking care to improve its competitive position. For example, by reducing the public deficit or helping to attract more foreign talent, especially if we take into account that, for years, the international organizations such as the IMF have been warning that the dollar is gradually losing some of its influence in the world. This is what the IMF itself has called the creeping erosion of the dollar, a process that has caused the percentage of foreign reserves nominated in this division to drop from 71% at the end of the 1990s to 59% today. But be that as it may, let me repeat that everything points to the fact that the dollar's dominance still has many years to go, and And now, some questions for you. Do you think that one day independent cryptocurrencies will become the backbone of the international financial system? What future do you foresee for the dollar? Will the yuan be able to become a currency capable of competing for world leadership? Leave us your answers below. And if you found this video interesting, don't forget to like and subscribe to all of us here on VisualPolitik if you haven't already done so. And if you like what we do, you can support us on Patreon and receive newsletters and special gifts. A million thanks to all of you who watch and make this project possible. All the best, and I'll see you next time.